What's up, you guys? It's Paul here, and welcome to the 95 Investors Club channel. Okay, now if you've been watching my videos before, you know that my channel was not named 95 Investors Club yet, but this is because I decided to start branding my channel a little more because I do work with a lot of working professionals who have 9 to 5 jobs, and I try to help them in learning how to trade stocks and trading options. And so I really wanted to create a brand around it and start building even a private membership around it. So from now on, this channel is going to be called 9 to 5 Investors Club. I'm going to be creating a Discord channel as well. It's still under work right now with the website and everything, but it's going to be called 9 to 5 Investors Club. And I'd love for you to be a part of it once it's all set up. Okay. Now, having said that, in this video, I wanted to quickly talk to you about how you can turn a losing trade into a winning trade. Okay. And the strategy we're going to talk about is called rolling over options. Okay, so the example I have here is for the stock, the trade desk, where if you look at the history here, I initially had a 460 call that was going to expire on September 18th, and I paid about $910 to first buy that call in the first week of September, and I was expecting for a quick rebound in the trade desk, and I was hoping that the stock would really shoot up to 460 or above by September 18th, but as you can see, by September 16th, the trade desk was nowhere close to being 468, and the value of the option dropped all the way from $910 to just $243. Okay, so instead of selling out of my call for a $650 loss, what I did was I rolled it over by another week. Okay, what that means is I sold out of this, but simultaneously I bought a call for September 25th instead at a slightly higher strike price, and I paid a total of $373 to open this, okay, to roll over this call to the next week. Okay, so now my total investment is $910 plus $373, which is $1,283. Okay, so what that allowed me to do is it gave this particular it gave trade desk some time to recover so that I could potentially recover my losses. Okay, so if you see here around September 16th, yeah, it was trade desk was around 441, still pretty far away from 460, which was the call I had before. And I saw that pretty much by September 17th and the 18th, it just kept dropping and there was just no time to recover anymore. So now that I pushed it off to September 25th, I gave it a little more time for the stock to start going up. And as you can see, if you've been following the stock, trade desk has been shooting up quite a bit. And then just in the last 1 week, it shot up 5.26%. So this 465 call that I have here shot up to $1,225. Okay. Now I did pay $1,283 for it, so I still haven't broken even yet. But even if you look at the price history of this was trading as low as $225. Just last week, but just because I was patient and gave myself enough time, it was able to go from as low as $225 to $1,225. And if trade desk does keep going up over the next couple of days, I would actually be able to lock in a couple $100 profit instead of selling out at a $650 loss. Okay, so this strategy is called rolling over options, where you don't have to sell out for a loss. You can just push out the expiration date by a week or two, waiting for that recovery in a stock. Okay, now let's look at another option which did not work out for me yet, which is Tesla. So with Tesla, I had a $560 call which I bought earlier this month. And the reason I bought it was I was expecting the stock to go up quite a bit leading up to Battery Day and even after the Battery Day, which it did for the most part. But, based on what we saw in the tweets that Elon Musk put out saying that, you won't really see the production value of Battery Day and everything that they're putting out until 2022. A lot of the investor optimism started dying down, and as you could see, Tesla dropped nearly 12% today. Okay. So I got a little too greedy here. I could have easily sold out of this. As you can see, I paid $760 for it, and just last week it was trading as high as $2,200. That was a quick 3x, and I could have sold out and been happy with it. But I got too greedy, admittedly, and I missed out on that huge gain. And now I'm actually down 15% instead of 3xing. Okay, so what I could do right now is tomorrow, as soon as market opens, this is going to drop potentially to $200 or $300 because Tesla dropped nearly 7% after hours. Okay, so instead of closing out of this at a big loss, what I'm planning to do is I would the October 2nd call, I would sell out of this, but in exchange I would go to October 16th and I would buy let's say the 570 or 580 call in such a way that I'm not spending too much money to roll it over. Okay, I don't mind spending an extra $500 to push it over by 2 weeks so that I'm giving Tesla enough time to potentially recover. Okay, so anytime Tesla dropped like this in a really short time, it eventually tends to recover, and that's what I'm hoping for at this point. And this way, even though my overall investment went up from 760 to almost 1260 now, if I give myself an additional 3 weeks from today, there's a chance that Tesla could recover and I could either break even or turn it into a small profit. Okay, so that's the strategy I wanted to share with you guys today. With options, there's always a chance that your option can expire worthless. So you always need to be aware of strategies that you can use to roll over to future dates so that you're not completely losing money. And that's exactly how you manage the risk. Okay. So I hope you guys find that helpful. If you do and you did enjoy it, please just smash the like button and leave a comment below if you have any questions. Okay, be sure to subscribe and hit the notification bell if you haven't already. And thanks again for watching, and until next time.